They're making it happen, whether it's utilizing H4 Mastery, whether it's utilizing these range plays. I've got a video in our dashboard that teaches you exactly how to set profit targets in every one of these scenarios and how you can maximize this with prop firms. So you can make sure that you don't just get funded, but you stay funded. This is becoming all too common now. I've been sent another journal. Do you know what? Next person, I'm going to reach out to them. I'll blur out their name and ask them if I can have their permission to share it, because you can't make this up at this point. It is the same thing. Mark, I think I trade similar to you, or there's some overlaps. I'm not profitable. Can you see where I'm going wrong? I have a little peek at it and say, look, can you just show me your last 10 trades so I can see what you're doing? And you look at their profit targets, and all I see is profit target, profit target, profit target. I'm like, well, you say you trade similar, but you're not letting your winning trades run. I've done so many YouTube videos about this. It's so obvious, so I have to share it again. This is where you set profit targets. This is where you shouldn't. One of the main reasons why I believe that there are situations, so it's not just black and white, you don't or you do. There are certain situations in which that you need to, if you're going to, let's say, pass on a prop firm and you're in drawdown and you need a certain amount to get out of drawdown, or you're just about to pass the prop firm, yes, setting a profit target might make sense, but you just setting profit targets just for the sake of it and not understanding if you're not letting your winners run is ridiculous, because what you've done is that you've eliminated any possibility for you catching a trade that goes on and on. And as you've seen in the market, it also implies that the market is the same all the time. And you guys know that's not the case. The market is never just the same in every single cycle. You think the market's the same for just 30 years in a row? Of course it's not. So if you're just setting a 1-to-1 or a 2-to-1, which is what I saw, a 2-to-1, regularly setting 2-to-1s and not understanding the framework of the trades that you're actually taking. I'll just give you an example. So let's jump into the technicals here. So recent price action here. Let's just go with the recent price action. I can see some for the left there as well. So if we look at this type of price action, you can see, right, broke the high, broke this low, and we're trending towards this area of volume. So this is naturally where price action is going to snap towards. This is the stronger magnet. Price will naturally be pulled, gravitated towards that. So that's your higher time frame narrative when you're playing this overall picture here. But you've got to dissect this piece of price action. Not reliable. Not reliable in the sense that we've been squeezing. So at any point we can have much deeper pullbacks when the whole thing is a squeeze. So in a situation like this, there's a trade-off. You identify a range that looks now clearer. You have the high time frame that could go to here, but you're also recognizing this particular sequence, if you like, is becoming more and more unpredictable because we're not in a typical continuation of trend. This is not your phase 1, phase 2, 3, as people in Falcon will know it. This is not your impulse, your correction, your continuation. This is your impulse into a squeeze that is becoming more and more unreliable as we've corrected deeper. So would it be more appropriate in this scenario to take a profit target? Absolutely. Would it be more appropriate to take a profit target in this situation if you needed to pass a prop firm? Again, absolutely. So it would be the equivalent of, because it's a higher in risk trade, but there is a trade in here. Let's say you took this a 40 pip stop and you wanted to set it at the lows. I always recommend 90% of the lows, but again, that's our mechanical management. So it'd be the equivalent of someone showing me stuff like this. This is what I saw. Similar trade setups. This is call it even at 3.5, you'd have been fine. Set that as a take profit, perfect. At least you're working with over 3-to-1. I'm happy with that because you're giving yourself the possibility to allow your edge to actually play out and let the winners run. Where what I would see is this, again, 2-to-1. So let's see where 2-to-1 is. It would just be there. And maybe there would be a justifiable reason here. You're like, right, I want to set that. When this is in momentum, the probability of this stopping here becomes so low that you're leaving so much profit on the table. But what, just because you're too robotic and too rigid with it. And that's what I would see. And on the flip side, these are the funnier ones. People will show me the other side of the extreme where they hold these trades. And I'm saying, right, okay. So they're like, Mark, well, if I would have just left my trade at break even, or if I left the risk open, even worse, right? I left the risk open, I would be in profit down here by now. I don't think that I should have closed the trade or trailed my stop. Interesting. So let's actually look at that in practice. So you got to the peak of 4.5% and you're telling me that you were comfortable price reversing all the way back to here just to be in 5.4. On what planet are you on? What planet do you come from in which that you think that you're going to let run in profit, pull all the way back to there, and then still hold your trade? It's ridiculous. Again, that's why you have to put real life versus theory. So it's not just about data. That's why I'm not always the biggest fan of like, oh, but the data shows this and the data shows that. Yeah, but you're a human at the end of the day, so don't just come at me with this data bullshit, because the reality is if you've got 10k running profit down here, you're not letting that go back to £100 and hope that it's going to go to 12k. That's just rubbish. So just make sure that you're trading from a perspective that is actually real. So that's one element. That's where you'd set a take profit, and then your trade-off is it might go down towards this area here. Fine. But there's a justifiable reason of why you've been able to use your own discernment and go, generally speaking, when you see price action like this, it's not as reliable as a continuation of trend. And I'll show you a continuation of trend, and we'll go back to pound dollar. So let's say JP225, we're jumping a bit, but this will make more sense. So if we look at something like this, if I'd set a 2-to-1 every single time, again, you wouldn't benefit from something like this. This is your very typical phase 1, phase 2, phase 3. Very, very direct. And that would be like me getting in here and then getting out there. It makes no sense whatsoever. So you're not letting the winning trades that have such a high win rate to actually win in the first place. You're going, no, my system says 2%, so I'm just out. And then you're saying, well, I don't care about the extra profit. I just stick to 2-to-1. So why are you in loads of drawdown then? Why are you constantly in drawdown? You've got to look at that. How far do your winning trades run? This is a straightforward continuation. It's positioned right at the highs, so you would be expecting a trade like this to follow through. There's nothing unreliable about it. These are your A++ high quality setups that you're aiming for ranges down like here and then down here. So closing that at a 2-to-1 within there is criminal, absolute criminal. If you're consistently profitable doing it and you can show that, fair enough. Most people I speak to that send me these journals, they're not. And the common pattern that I'm seeing over and over again, especially this year, I'm at an all-time high of journals of sent that just look like that. And then all I say is, you might think you trade similar, but you are missing a few technicals that we can teach you. But more importantly, it doesn't matter what I teach you. If you still show me that you take 1-to-1s and 2-to-1s, it doesn't matter if you know the Falcon system inside out. I'm still going to give you the same advice. Let your winning trades run. So that's one element to it. Straightforward continuation. Let's go back to pound dollar. So another example, right? This one's a little bit more reliable. This whole thing is a squeeze. As you can see here, this is more of a direct movement. You've got your area of volume there. Price comes into that. I'm not going to go into the exact entry criteria, but let's say you decided to get long, whether it was on the 4 hour, the 1 hour, it doesn't matter at this point, but this is the trade idea. Rough stop within there would probably be close to about 35. At the high, you've got 6.5, 90% of that. It's about 5.8. So again, it's the equivalent of going, here you go, Mark, I'll close that at 2-to-1. I'm like, really? So you close that. So where's the logic behind it? So my plan says 2-to-1. I'm like, right, okay. Well, this is a phase 1, phase 2. The chances of this stopping here is so unlikely that you don't know what you're trading, and I've seen it too many times now. And it's actually painful to watch this, because I'm looking at these traders, guys, and seeing you are actually a profitable trader right now with 1 or 2 changes. It is scary how you cannot recognize that it's slapping you in the face and you're just choosing to ignore it because you've fantasized over this idea of getting in and out of the market, because when you're in the market, you're anxious, or when you're in the market, you think it carries more risk, or you've been told that you just love this idea of just trading for an hour a day or some bullshit, right? That's not the reality. Who do you know that trades for an hour a day that has done that for 10, 15 years and has lived to tell the tale? What, 0.01% of people? So why are you chasing that unicorn? Focus on sustainability. Focus on something that's tried and tested, that's consistently worked over decades. That is what you should prioritize. So yeah, it is frustration when I see that, because I know these people can make money. Like, they're actually knowledgeable enough to make money, but they hold themselves back in these scenarios. So there's a time and a place for when you set profit targets. This one here, you could set that, but it's situational. So if you're in drawdown, that's at 6.5 and you're at -2, and you're saying, right, I'm going to be up, +4 or +4 point whatever, that would make sense to me, versus you holding a trade and hope that it's going to go all the way back up to here, because your priority at that point is not to make loads of profit. Your priority is to get out of drawdown. and you don't get out of drawdown by focusing on getting out of drawdown. You set yourself up mathematically that when you're playing these ranges and you understand where price can pull back deeper, you understand where a lot of people could be taking profit, you smartly set your profit targets because you're protecting yourself against yourself of getting into greed and hope and maybe thinking you get a home run trade. So there are situations in which the market is positioned for you to hold the trade, and it wouldn't be to your advantage to actually get out of the market. An example, which I was going to show you, is the JP225 one. It's the equivalent of that. Let me go into a lower time frame and you'll see what I mean. When you're trading a structure like that, if you guys know what this is a phase 1, phase 2, phase 3. What you'll find is that we will supersede the impulse of the original move. So the origin of the move, we can measure that. And this is real simple. I learned this nearly 17 years ago and it still applies today. It's so basic. So if we look at the high, you measure that. This is where the first point, so you understand what I mean. This is the first area in which the market is more likely to consolidate deeper. And that's important because that gives you the ability to go, right, if I was to maximize at least that is where it would be appropriate to set your profit because it's a big move versus going, well, I'm just going to hold the whole move. It's unrealistic that you would always do that. But if you're only setting a 1-to-1, 2-to-1, 3-to-1, or even a 4-to-1, this is nothing against 1-to-1s or 2-to-1s. I don't care what profit target you set. I'm saying when you do it, you eliminate the possibility of ever being in those trades when the market is just explosive. And you're never going to know when that happens, but it's almost the cherry on the cake. You don't fantasize over returns, you don't chase them, but it is nice to be in those situations in which that you're just trailing the stop for the high time frame idea that you understand, and it happens to be, you know, a 12% trade, and your average win might actually be 4%. But if you don't allow yourself to ever be in them, well, then you'll never catch them. You've eliminated everything. So let's say you was in here. There was loads of ways to take this trade, but let's say you was in here for around cropped through. Let's see where 2-to-1 is as an example. Yeah, so 2-to-1's there. You're closing it in the middle of the range. Like, you're already in the phenomenal trade. The funny thing is you've identified an incredible trade. You know, the chances of this reversing is like 3% once it's in flow, and especially when we start getting into the 4-hour, once that's in place, it is like such a low percentage that this will reverse. And you've gone, do you know what? I only want, 3% of the capability of the trade. You wouldn't make that decision, but you are making those decisions every single day. You would at least go, Mark, I just wanted to play it from a range point of view. I got out of 5-to-1. I would say, still don't think you made the right decision, but at least you'd let the range play out. I can live with that one. I can't live with the 2-to-1, right? And I'm not a greedy person by nature, but there's a certain element of you're trading, guys. Things are random. You at least want to maximize when you can maximize, because when it's and you guys have experienced it, when it's that painful drawdown period, or you're just on this wrong end of the sequence where it's loss after loss after loss, or you're on a break-even streak, damage control is there. But if you've never maximized on the winning trades that had the ability to win, what happens when you're just in drawdown? You're getting hammered, loss. At least you could have offsetted that by when you could win. You didn't maybe squeeze every juice out of the orange, but you had a good squeeze. And if you see this, I don't care about fantasizing over maximum, and this was like a phenomenal position. 21% here to fill most of the range of the original impulse that I explained, right? So you've achieved that, and then you've got target 2, which would be you measuring this and being on the break of the structure itself, which would roughly be down here. So again, rather than fantasizing over the monster trade, you should have at least played the range. That's what I'm talking about. So I want you to now think, and this is how this could be helpful, even if you don't trade directly how we trade, you should at least have something to work with, that if you're trading continuation, so let's say you're trading this, you've got the higher time frame, you want to trade that, it would be the equivalent of you showing me this and going, Mark, this is the high, this is the low, for example. And what I'm going to do, my plan is to take these trades that are backed by the high time frame, that have lots of confluence. So you got tick, 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 tick. And then, but what I'm going to do is I'm going to close it right here. And I'm like, why? Why are you going to close it right there? Well, I have to stick to a 2-to-1. I'm like, who told you that? You don't have to stick to a 2-to-1. It would be very different if people were sending me journals consistently, never in drawdown, and aim for these super low risk to rewards. And the other problem I have with it is that the type of style that does aim for that, you have to remember a couple of years ago, that same type of style or way of thinking of the market used to be obsessed with partials and 20-1 risk to reward, and would take partials incorrectly. They don't even know what they're doing. They would say they've taken a 10% trade, but they took off most of the trade at like 1-1 or 2-1. It's insane. So I don't think people do partials correctly. Only a very small percentage of people that I can see actually pull it off correctly and have a solid strategy with that. So they don't do that correctly. But if I'm seeing now you've gone from aiming for these massive home run trades of 20%, before you've made your scrambled eggs and baked beans, then you can't go from that to surely like 1-1. That's crazy to me, the swing, because that's basically saying that, did your original strategy not work then? How could you be so opposite? How did everyone just sweep that under the rug of, yeah, we used to aim for 20-1 and now we just aim for 1-1. We used to have a 2-pip stop and now we have a 12-pip stop. It's like, well, what the fuck happened before then? Like, we just forget about these things. It's weird. Anyway, I think this is holding you back if you just go solely profit target and you don't assess the situation. And the situation isn't always technicals. The situation can be psychological. Like, psychologically, I think it's more appropriate for you to bank a 5-1 on a range play, set the profit target if you're in minus 2% drawdown, because you being just above in the positive gives you at least a clearer head to make better trading decisions moving forward, to then take the next trade and then to take the next trade and put yourself in a good position to be funded. We just had 3 people pass on our in-house fund in the last week, and we've got a couple more that are like 1% away from passing on the in-house fund. They're making it happen, whether it's utilizing H4 Mastery, whether it's utilizing these range plays. I've got a video in our dashboard that teaches you exactly how to set profit targets in every one of these scenarios and how you can maximize this with prop firms. So you can make sure that you don't just get funded, but you stay funded. And mark my words, now to the end of the year, we're going to make an insane amount of progress within the community, because this year has been phenomenal for us. But more importantly, with our in-house fund, you're going to see that go to the moon next year. Over 5 years successfully of running the in-house fund, what do you think is going to happen next year? 2025 is going to become even more difficult for you to get access to our in-house fund. So you've got a great opportunity now if you want to be coached correctly and you want to come in with no ego, have some humility, get yourself back on track, put yourself in a position from now to the end of the year. You can make some really good inroads, but more importantly, actually have a plan for 2025 to be amongst the top traders that are doing this. And they're not here today, gone tomorrow. They've got long-term plans. In a few weeks from now, we'll be in Dubai for our Wealth Creation Mastermind. We had the one last year, which was just exceptional. And we have quite a few of those traders last year that were on the brink of around 6 figures, doing really well, really consistent with it, have now returned a year later at 400K, 500K, sustainably. They're not going from 7 figures back to 6 figures. These are incremental steps that can sustain the test of time. And I think a lot of this industry this year has woken up to this idea of, I don't want to be glued to the screen all the time. I don't want this stress of getting funded, getting unfunded constantly. I don't want to be trading in a way that I'm stuck to just one session for the rest of my life, because I think people are actually waking up and thinking, I need to trade in a way that if I were to trade like this for the next 10 years, I could actually live my life. Remember, you started learning to trade because you wanted freedom in the first place. You don't want to be glued to looking at candlesticks all day. You want to do things. You want to move, have a lifestyle that a top 1% can actually have. And how can you do that if you're constantly stuck all the time, that you almost become just a slave to your desk without actually building a life that you wanted in the first place? So food for thought anyway. And if you are in this position and you're a little bit unsure on what I said, shoot me a DM, send me a message on the Falcon IG. We're happy to point you in the right direction. But I'm excited now until the end of the year, full steam ahead. We're cracking on with it. I really hope this episode helped you guys.